American Airlines has been kind of the black sheep of the airlines industry. This thing has just fallen off a cliff. Even when the other airlines were, were strong, this thing was not looking so good. Okay, the outlook, the rhetoric on the street for this stock is so bearish. So bearish. Okay, I'm just looking for some fundamental news here. Okay. $31.87. Let me start a new sheet here. Stock is 31.87. Okay. Expected move, everybody. What do you see? Really weird that there's no 32 strike. How is that possible? But there isn't. That is so weird. Huh. So let's look at the 31.5 straddle then, which is $2.26, roughly 38 cents in the money. Gives us an expected move of about $1.88. Okay, we're going to say about $1.90 move. Okay, that puts us at a range then of 30 up to 33.90. Call it 33.80. Okay, well, we're not going to see anything to the downside here on a chart because we're down there. Upside, there's nothing to stop this stock on some sort of short covering or rebound to the upside. Okay, I would on, let's call it trader intuition on this one. Okay, we'll measure what an iron condor is. But if reward to risk to some sort of upside trade here is really, really good, I would probably want to do that. The reason being is the expectations are already so incredibly low for this report that any hint of any recovery, anything here, I personally think is going to knock the shorts out of the box. But let's take a look. That expected move, again, of 30 to 34, basically. If we did the 31, 30, and the 33, 34 iron condor, that's, wow, that's, I mean, vol is expensive here. The 31.30 and 33.34 iron condor is 60 cents. Break evens there of 30.40 up to 33.60. Okay, just inside, but pretty juicy. Pretty juicy. And I'm not so worried about the downside. I would I would be a little bit more concerned about upside exposure. Let's see if we change this to 34.35 on the upside. Okay. So now the 31.30 and 34.35 iron condor is about 46 cents. Break even of 30.54 and 34.46. I actually like that, even though we're at 46 cents there. Maybe we could squeeze an extra penny or two. I like that. It definitely has an upside bias to it. Okay. Now, let's see what an upside call calendar would look like. And obviously we're measuring volatility here. Well, it does, Michael, but look at the difference in the break-even points. Right? So it does, but it's just a matter of if you're comfortable with the break-even points. All right, so I'm looking at an upside call calendar here on the 34 line. Okay, it's about 25 cents. And not great. I mean, it's okay. It's not great. This upside call calendar. Let's see on the 35 line, if we go up even further, how that looks. And again, I'm smacking vol pretty good here. And then what I also want to look at is potentially doing a call calendar, but even skewing it to the long side, meaning buying a lower strike call than the one I'm selling. Okay, this is a little bit better. This is the 35 call calendar. That's a little bit better than the 34 call calendar. It's not bad. But now let's see if we did a 35, 34. Okay, that's very tight market actually, so that's good. Whoa, didn't want to do that. And sorry guys, I know I'm kind of talking to myself as I'm doing this here. I don't love this. Obviously, if the stock rallies big time, it's a nice winner, but at the expected move on this one, we're not even 1-to-1. So let's take a look at a 34-33 skewed call calendar. Should cost a little bit more than that 40. Yep. Okay, so that's about 57 cents. Okay, still not great. 32 half, 33 half. You're just saying straight call vertical, John? Okay, it does, but on a straight, just a straight directional trade, we want to see upwards of 3-to-1 for just a straight directional trade like that. But you are correct in your evaluation. 100% correct in your evaluation. Okay. So Ken, I like the upside here. I do like the Iron Condor also. Which one, 2.5 to 1, Michael? Which one are you, what we want on a directional? On a non-earnings event, yes. If we're adding in a little more risk because it's an event, then I want it closer to 3 to 1. All right, so I'm not seeing anything that I overly love. Well, Ladon, they're not over here because neither one of them were filled. Neither one were filled live, so they have never been up here on the watch list. I don't overly love any of these calendars here, but I do like the upside in American. Okay, again, 34 is the target. Let's see next week. Yeah, I'm kind of ballparking that right now, bud, on my own here. Well, Ladon, they could not have been filled live at the prices that we put out there. Okay? They were not, I guarantee you, and you can show me your fills, they were not filled at our prices. Now, Ladon, if you would have said something yesterday about this, you would have gotten out as a big winner in LMT, and we would have managed your MMM a little bit here. Okay, so you got to pay attention. This is for everybody. You got to pay attention to what you see up here in the watch list. But Ladon, again, I guarantee you, you did not fill this at our prices. Lawrence, that works too. I like that strategy. What's riskier if the stock craters? That strategy? Yeah, of course it is, because you're getting, you're definitely getting long delta. Yeah, you're just saying though that, you know, you're playing the upside here. I like that a lot. Okay, let's evaluate just this 35 call calendar again here. $0.20. Yeah. So Ken, let's come back to AAL. I like the upside. I'm just not seeing anything that I truly love from a reward to risk standpoint here. But maybe things will change by the end of the day, and I really like the potential upside there. All right, let me post this up here. I'll be right back, guys.